Hey, what's up investors? Juan Pablo here from 100% Finance, and today we're going to talk about funding multi-unit properties. Okay, so we're going to talk about in depth step one in regard to finding the money so that you can ultimately buy, acquire, and close on a cash flowing multi-unit rental property. Stay tuned. Now my four-step process, which is called the cash flow cycle, is as follows. Step one, find the money. Step two, find the deal. Step three, perform due diligence. And step four is close. Now in this video, we're going to discuss phase one, find the money, with an emphasis on how you can find the money for your multi-unit properties the 100% finance way, but without relying on government assistance such as SBA loans and things of that nature. Now with Find the Money, this is where we go through the four-step process in which we repeat every single time we find a multi-unit property for ourselves or for others, okay? So it's extremely important. So when you find the money, that's the first step you have to do. Why? Because you skip steps, right, and go straight to the second step, which is find the property. Many people who find properties, aka real estate agents as well as wholesalers, will not be willing to do business with you if you don't first and foremost show that you have the capital to buy a deal. Because it's nonsense, right? Why would they spend their time driving for dollars, showing you listings and so forth, showing you properties, and lo and behold, you don't have any money, right? So that's the first step. You gotta show your credibility by finding the money. And with the money, we're talking about money that will cover your out-of-pocket costs, such as your down payments, your soft costs. Now, soft costs are costs that you incur before you close, such as property inspections, appraisals, forming entities, and the like. So soft costs, down payment money, closing costs, of course, if a mortgage lender is working on a property for you, you definitely got to pay them, right? And of course, if you're working with an agent or a wholesaler, that person gets paid at closing as well. Closing attorneys get paid at closing, so you have to have money set aside for closing costs as well. So all that, soft costs, down payments, and closing costs, I consider that total out-of-pocket costs. And then we have the other aspect, which is mortgages, okay? So if you're able to finance both the out-of-pocket costs as well as the mortgage aspect, guess what? You just finance a multi-unit property 100% finance. So these are the things that you can prepare for phase one, finding the money. First thing you need to do, business credit. Now, business credit can be useful for acquisition, acquiring multi-unit properties, as well as for reserve purposes. So after you own the property, if the unit in furnace 2B happens to go out in the middle of winter, lo and behold, you have reserves called business credit to serve that purpose. But business credit can also be used to acquire cash flowing rental properties as long as you're able to convert it to cash, which we teach at 100%finance.com. All right. Now, one of the things I would like to share with you is that when you find business credit, you can use that for your total out-of-pocket costs to cover some of your soft costs, closing costs, and/or down payment money that's needed to acquire that cash flowing multi-unit property. Now, after you apply for business credit, you will receive some options, whether you need to go this route or that route. Okay, and you can definitely use that knowledge to your advantage to applying for other sources of financing, because with business credit, the criteria where your credit is concerned could be a bit more stringent than mortgages. So it's actually great as a first step to apply for business credit to cover those total out-of-pocket costs I just mentioned. Now, after you apply for business credit, let's say you get awarded business credit, the next thing you want to do, my friend, is be prepared and gather full documentation. Documents such as your credit report, because one thing that I like to do, I don't like to share my credit report with mortgage brokers. I don't like them to run my credit. I like to share my credit report with mortgage brokers and say this: hey, I know you got to run my credit using your own system, I get that. But in order to avoid a hard inquiry, can you just take a look at this copy of my credit report and provide me some insight? If you need a copy of your credit report, just check out 100pfcreditcheck.com, 100pfcreditcheck.com to download a copy of your credit report, and you can present that to mortgage lenders. So you want to gather all these documents, your credit report. You also want to gather your financials, because they want to make sure, independent of your credit, if you're capable of paying the mortgage out of pocket, worst case scenario, if the tenants don't. right? They want to see global income. They want to see proof of income, such as copies of your tax returns. They want to see copies of your bank statements, W-2s, 1099s, things of that nature. And if you don't have those copies, you don't have that documentation, no worries. There's a mortgage product called low documentation, low doc for short. And we have that as a resource on our webpage. Just check the link below to learn more. But you can definitely move forward with getting qualified for a mortgage as long as you do your preparation and prepare your docs in advance. Now the last thing you need to prepare in regard to documentation is your PFS. That's your personal financial statement. This is pretty much your financial report card to see how well you're doing financially, right? It's comprised of your income statement and your balance sheet, to say the least. But one thing that mortgage lenders want to see, they want to see how much liquid capital you have, your debts, and the assets and the liabilities you may have. And they tend to focus on assets that relate to real estate because they want to see if you have experience. And if you happen to have experience, that has a huge impact on you qualifying for certain types of mortgages, such as commercial mortgages. Because I know many of you might want to get started with multifamily properties right away. Multifamily is 5 units and up. However, being that you may not have the experience, but you may have the capital, let's say to do a 10 unit, it could be difficult for you to move forward with a commercial mortgage unless you have a partner who brings that experience to the table. Okay, so it's really important if you want to get into multifamily, commercial properties, commercial mortgages, for you to have some experience. Now, if you don't have the experience, no worries. All of us start out that way, right? Without experience, duh, it's a given. But what you have to do is you might have to crawl before you can walk. You may have to do some residential properties first. So it will be important for you to gather all these documents so we can move to the next step, which is to apply for mortgages. So if you don't have experience, then apply for a residential mortgage. A residential mortgage covers anything from 1 to 4 units. So you can still get multi-units, right? With a residential mortgage, you can get a 4 unit. It's that simple. But you have to reach out to mortgage brokers and have them advise you on your options. So it helps to get the documentation prepared, and they have the business credit as well in your possession. So that way you solidify the money aspect. And here's a few tidbits, an extra point I'd like to make. Now, if you do have experience and you're able to qualify for a commercial mortgage, then you're able to negotiate seller financing. So on this channel, I get that a lot. Hey Juan, well, can a seller finance 100% of the property, or can I use financing from the seller for a 3 unit? Nope, unfortunately you cannot. Mortgage lenders who are residential, they don't allow seller financing, but for commercial, they do. But only a max of 10% of the purchase price. Why is that? That's just the rules they laid out. I don't know why. But pretty much if you go commercial, you can get an extra leverage in acquiring your cash flowing properties. So if you use business credit, if you use seller financing and use commercial mortgages, or if you use other ways such as private money or private lenders, equity partners and so forth, you might be able to use your retirement accounts, you'll be able to finance a deal 100%. All right, so hopefully this information was useful for you. I definitely don't want you just to become aware of it but not apply it. So if you're curious to know about how you can get started in finding the money, just check our links below, so that way when you apply, we'll be able to share with you your options, because we're interested in helping you become financially free and independent through multi-unit properties. We at 100% Finance, we help you fund and find your multi-unit rental properties. As always guys, this is to your success. Make sure you like, share, and subscribe. Peace.